Hello and welcome. You're watching Market Meter on Money9, India's first multilingual platform for personal finance from TV9 News Network. I'm Sakshi Batra. People, to those who are watching us on YouTube, do not forget to like and subscribe to our channel and also hit the bell icon so that you can get notified for our new videos on markets and on personal finance as well. You can also get connected with us through all our social media platforms on Twitter, Facebook, LinkedIn, and Instagram. And also you can follow us on all of these platforms as well as stay connected with us on our website, money9.com. Stay tuned with us. Let's begin with this show. We have a very special guest joining in. Mr. Rahul Shah from Motilal Oswal Financial Services joins in to help us understand and make the most of what the markets are looking like right now. Good afternoon, Mr. Shah, and thank you very much for joining in. Well, the markets have had a great run last week, and we are still holding up closer to those record high levels as far as the Nifty is concerned. How are you looking at the markets currently?
Hi, good afternoon. I think what we have seen in last few sessions, I think we've been the best performing markets in month of May in the globally, and obviously in this month also we've seen the Nifty and Sensex touching a new high. So my sense is, I think going forward, I think we should continue to outperform. I think the biggest worry we were discussing a couple of times was, I think, the rising corona cases, and that we have seen a significant decline, and plus the aggressive vaccine drive by the government. I think these two factors have helped markets to regain the strength back. And importantly, to understand, I think the reported numbers for Q4 of the most of the corporates are out, and we have seen that the numbers are quite robust. I think on back of that also there have been lesser disappointments and more upgrades in the most of the stocks. I think that's the reason I think we've seen in the markets, and we've seen the stocks going up, and the markets touching new high in last few sessions.
Yes, and would you actually say that the record run will continue from here on as well? And if you could list out some of the factors that the markets would be looking at to get some triggers?
I think if we look at, interestingly, one important factor is, I think we've seen this all round performance by the sector. It's not only the sector specific, like a couple of years back, I think only financials or maybe few heavyweights performing, and the Nifty used to trade at a high new record at levels. But here, if we look at it, I think the cyclical stocks like metal and cements, which are in the front seat right now. We've seen the pharma stocks doing quite well, and since last 1 year, year and a half. We've seen banking stocks catching up the momentum. We've seen the IT stocks again beginning the in this month. So completely all round we've seen in the markets in the first year. So now the second is important thing to look out for is now the all eyes are in the global markets. I think the global markets are also near to all-time high, and they have done quite well in last few months.
Yes.
And I believe that until the time, I think we see some sell-off in that globally, we will not see anything downgrades coming into India as well. Secondly, now the second focus again will move towards to the monsoon, which is going to
Yes.
come up. I think we've already seen that started in Kerala, and it's picked up quite well. So I think that is one factor again to look into the markets. So I think the market looks all right. I think as I mentioned, it's all around bull markets, so it will continue to do well going forward as well.
Okay, so the markets will do well going forward as well, and we have seen a broad-based buying this time around across sectors and not just one sector that has performed. And now talking about sectors, I also wanted to ask you about these two buzzing sectors. Like one is the auto sector and the other is the realty space as well. Or both of these are actually gaining some traction. We've spoken about the realty and auto space again, but in particular, if you could actually name some of the stocks that you're looking at in these two spaces.
I think auto, obviously, one trend is obviously the opening of the economy. So we are seeing in every second day we are reading, the unlock with guidelines for the states where they have announced lockdowns since last month or so. So I think direct beneficiary is auto, right? The discretionary spending is going to rise. Interestingly, we see that the GST collection for the month of May, in spite of the lockdowns in the several major states, the run rate has been in 1 lakh plus. So I think the momentum has been continued in the economic development also. So from my view is, I think auto should continue to do well. We saw the results for the from all the auto space and the auto ancillary, especially if we saw the numbers reported by Motherson Sumi,
Yeah.
quite robust. The numbers reported by Bharat Forge, which was again a quite robust. If we saw some mid caps like Asahi India Glasses, then again the stock is done quite well. So I think all put together, I think what looks like is that I think auto and auto ancillary pack, which were as sold off and because of the corona and the lockdown, I think which are gaining momentum back. Interestingly, the monthly numbers reported by most of the auto pack were in line, and there were again no major surprises or disruption in terms of the auto numbers. Obviously, what the street was expecting, it was better than the street which was expected. So my sense is, I think auto again looks interesting play. So two-wheelers and passenger vehicle, four-wheeler passenger vehicle looks very interesting from going forward to play the auto.
Yeah. And what about the realty space? Is that something that also you're looking at? Any particular stocks over here that one can keep on their radar?
I think a space, I think two ways to play the sector. I personally believe, I think indirect way to play is much more safer and much
Yeah.
more eligible to go for it. One is you're going directly buying in housing finance companies. So I think
Sure.
if you look at it, post DNB's deal by investors, couple of investors which they gave their in the stock did quite well. So all your housing finance companies were re-rated last week, and you saw good
Yeah.
amount catch up in that. So my view is, I think in HFCs it would be the right play to play the real estate stocks. And in real estate also, if you look at it, post a cut down in the duty cuts by the government and which is continued, we've seen the
Sure.
good traction in the open up days. So when you are also interacting with a couple of large real estate
Yeah.
players, they have been also of the opinion that they have a good number of inquiry in the real estate space, and the sale has also been quite good. So my sense is, I think again the real estate stock should do well, and then the NBFCs back, the housing financiers also should do well. So Pyramid Enterprise, Kenfin Homes, they are the two large plays which I like. And in a large cap space, I think HDFC, which again has underperformed vis-a-vis in the entire space. So I think this three should be the good bet for somebody looking forward to play into the real estate sector.
Yeah, and you took the name of Piramal Enterprises. That's clearly in news today because of the DHFL insolvency case and the hearing that's come out in favor of Piramal Enterprises, with the resolution proposal of which has been approved with some kind of condition so far. And those are the little details that have really come out in the media right now after the hearing. How much more upside would you see for this company because of it's now going to be taking care of DHFL, and how should investors really look at both these spaces?
I think importantly to understand pyramid enterprises, I think there are two factors to it. One, obviously, they have their own pharma businesses, which have a deep value in the company and the current levels. Number two, I think if you look at it, I think the two ways to look at it. So last 2 years, the company has been focuses from the wholesale lenders. They are trying to shift their focus to retail lenders. So earlier, that 40% of the book used to be by the 20% of the wholesale borrowers. From there, they have changed their model and they're trying to widen their business. So I think that has worked very well for them. And then secondly, the demand DHFL deal which they bid for it and which they got it, I think that again has done very well. So they got a book I think around 75,000 crore plus at a rate of 30,000 crore. So I think that too also they have to pay them this money in terms of NCDs over a period of time. So I think
Right.
this is very well for pyramid enterprise. So there is again a deep value focusing shifting from a wholesaler to retailer that will add value. And number two, I think deep value in the pharma business as well. So I think this both will work very well for pyramid to look for.
Okay. Sure. Understood that. Let's move on to your recommendations. What are you really recommending investors to keep an eye out on for the long term? Any two particular picks that you would like to share today?
I have two ideas which I'm going to recommend today. One is obviously we've seen that entire oil and marketing space has done quite well in last few sessions. Obviously purely on the back of the Q4 numbers which were very strong. So and from that space, I have been recommending BPCL. The stock trades at 8 times earning forward and a one-time book and with a good dividend yield of almost 6% dividend yield. So my view is I think BPCL should continue to do well, and plus the disinvestment which is around the clock. So there could be a trade to buy BPCL. Plus, obviously, the GRMs at Singapore GRMs are going higher. So I think that the margin, refining margin also for this company will continue to grow well. So I think we'll buy BPC with a target of 700. That is what the first recommendation is. Second recommendation is Aditya Birla Fashions Limited. So once the opening of the economy, which is going to happen now, I think the two segments which they deal into, and obviously it's going to go higher and higher. So my view, I think one opening of the economy plus second, I think the retailers allowed to open in the economy will allow will push their sales more. And thirdly, the two acquisitions which they had made about the higher end. So this is a complete mix of a higher plus mass consumption story. So I think available at a very reasonable valuation for investors looking for a 1 year perspective. So one can buy with a target of 250 positions.
Okay, BPCL from the oil and gas space and Aditya Birla Fashion looking at the unlocked trade happening. Both of these stocks could benefit from the current levels and there could be a substantial upside as per Mr. Shah's recommendation. Thank you very much, Mr. Shah, for sharing these
Thank you.
stock recommendations and the market outlook also with our viewers. Let's now move on and then see how the markets are trading at this point in time. It's over half time right now. It's almost 1 o'clock, and you can clearly see that the markets are holding on to some minor gains that they had clocked in the early trade as well. 0.1% uptick for the Sensex right now, 52,155 as the level, about 50 points addition there. 0.3% of the uptick can be seen on the Nifty 50. 15,700 is protected, over which it had opened today as well, about 50 odd points of an addition there. The Nifty Bank is doing better with 0.4% gains right now, 35,432. And the broader markets are clearly outperforming with the small caps taking the lead here, 1.4% uptick, 24,592, clearly trading around its all-time high levels as well. The mid cap index also up by almost 220 odd points, and 22,724 is the level at which we can see with almost 1% gains for the BSE mid cap today. Looking at the sectoral picture, most of the sectors are still trading in the green, and you can clearly see as far as the buzzing sectors are concerned, that there'll be just two sectors, including like what financial services and perhaps pharma, which is seeing some kind of a decline over here. But other than that, all the other sectors are in the green. The auto segment is clearly leading the charts right now with over 1% gains and 0.5% gains for the realty, banking space. Also, media stocks are rising higher. IT space and FMCG are contributing with 0.5% gains as well. Let's look at how the Nifty gainers and the losers picture is also emerging at this point in time, and if there is any change from the early levels of the Nifty gainers and losers at this point in time. Now, we did see some of the gainers coming in from the auto pack, the Tata Group stocks. They were also rising high today. Right now, you can actually see Adani Ports leading the charts with 6.8% uptick there. NTPC, Power Grid. So the power stocks are fueling the fire in markets right now. Over 3 to 4% uptick right now. From the auto space, it's Tata Motors in the top here with over about 3.5% uptick right now. And Ultratech Cement also inching up higher with almost 3% gains at this moment. For the losers, let's see how the picture is emerging at this point in time. So the Bajaj Twins are still down about 3 to 4.5% in trade. HDFC down about 1.3% as well. And Cipla and Dr. Reddy's are the other counters that are 0.5% down in trade right now. So some of the pharma pack also not performing in trade today. News flows coming in for Dr. Reddy's of the recall of some of the medicines, and that's clearly a downtick trigger for Dr. Reddy's as well. But overall, the markets are still holding up onto the gains, and we just have to see how the markets really close in today. Most of the experts do believe that we've seen a sharp run up already. We may see some consolidation, but again, the bullish trend will continue in the long run as well. And 16,000 cannot be ruled out for this week as well. Most of the technical experts have also pointed out. With that, we wrap up this edition for you, but do not forget to like and subscribe to our YouTube channel, Money9, and also hit the bell icon for all the notification of the new videos that we put out on the YouTube channel as well. You can get connected with us on our social media pages on Twitter, Facebook, LinkedIn, and Instagram as well. And also log on to our website, money9.com, for all the latest news, articles on markets and on personal finance. Do stay logged on.